Forex traders, 70% of them actually lost their money within 3 months. And then 100% of their money was lost within 12 months.
What's good, everybody? Welcome to episode 5 of Rookie Mondays. Last week, we told you the ultimate checklist to picking stocks.
Yep.
This week, we about to talk about long-term investing versus short-term investing. Which one is better for you? You know, because we always hear people talk about short-term investing where it's like, yo, I made $5,000 yesterday in the stock market.
All the time.
For real, you could go on Instagram and see that right now. You know, but then we hear people talk about long-term investing like Warren Buffett. A lot of times boomers talk about it, where that's where you hold the stock for over a year.
Yeah, exactly. Because there's different sides to both. People say, you know, short-term is great, and then you have other people saying, no, I want long-term only. So let's figure out what's better.
Exactly. So let's get into it, bro. What is long-term investing versus short-term investing?
Basically, I'll tackle the short-term part where short-term investing is essentially when you buy something and you're holding it for 1 year or less. And there's different things in short-term, right? So you got a scalper who is basically buying something at 12 o'clock and they're selling it at like 12:05. They're trying to trade within minutes or sometimes even like seconds because they're just trying to get that quick return. And you have day traders, which you guys probably hear about all the time. These are famous people with courses and all that money, who are buying stuff on day one and then selling it at the end of the day or even day two. Same thing, quick return. And then you have swing traders. This might seem a little bit more like long-term, but it's really not. It's when you buy something and you actually hold it for a week, 10 days, a bunch of months, or anything basically less than 1 year. That's basically what swing trading is. So different categories. Pros are you get money really quickly, right? You're getting great returns, very, very lucrative. And then you have cons because you can't time the market. You don't know where it's going to go.
Exactly.
So it might go down, which we're going to get into later.
Exactly. And then, long-term strategies. Long-term is when you hold a stock or option for over a year.
Exactly. The complete opposite.
That's it. It's that simple.
I guess there are cons to long-term where it's delayed gratification if you think about it as a con, because if you see, as we talked about earlier, on Instagram, people are flexing that they're making so much money.
Yeah.
And then some people are like, yo, I'm holding stock for a year and I only got $500, but this other person made $500 a day.
Yeah.
So that might be a little bit of a con for you guys. But the pro is, should we tell them right now or should we wait?
I think we should wait.
All right, bet. So I think before we continue the video, there's something you guys have to do, bro. I can't remember what it is, though.
Oh, my God. Bro. I think that they should like, comment, and subscribe.
Yes.
And please hit the notification bell so you know when we're dropping videos right on time.
Because we drop how many videos? 2
videos a week.
Exactly.
Yeah, for real. And also, listen, shout out to my brother who made this hoodie for me. You could follow him and follow his clothing brand at Blunt Life Clothing.
Yep.
This hoodie is fire. It's comfortable. It's warm. Y'all should go check that out.
I'm about to cop one myself.
For sure. You already know. But let's get into it, bro. I know you wanted to talk about an article you saw on Business Insider.
Yeah, so basically, if you look at the screen right now, right, you see basically says if you are day trading, you will probably lose money, and here's why. So this article mentioned a bunch of different, stats where it looked at short-term trading, compared it to long-term trading, and we found some of them to be pretty interesting because it did highlight certain things you guys might not be aware of. For example, you want to give them one?
Yeah. Like, I love the part where they talked about the day traders in Taiwan. They was like, from 1995 to 2006, they found out that only 5% of those day traders was profitable.
So if you think about it, not a math guy, but that means 95% were not successful.
95%.
So just think about that.
Profitable.
95%. Wow, that scares you, right? So now that's a great, segue into this. But most people who want to be option traders, future traders, forex, all this different short-term trading, if you think about it, forex traders, 70% of them actually lost their money within 3 months, and then 100% of their money was lost within 12 months.
Whoa.
Wait, hold up. Say that again? Do I say that again? Like,
you gotta say that again, bro.
Like, 70% of forex traders were losing money in a 3-month time span. But then 100% of their money was lost within a 12-month time span. So
that's wild, bro.
That is, I would say, a con of short-term trading, losing 100% of your money,
so.
Right? Like, so just think about that. So that article was highlighting short-term trading. Now, let's just swing a little bit. Let's talk about long-term trading.
Long-term trading, man, the thing that takes so much patience. So if you look at the graph on your screen, it's a graph showing you the percentage of time that investors lost money depending on how long that they held the stock.
Exactly.
All right, so if you held the stock for 1 month,
which is short-term trading, exactly.
That is actually short-term trading. Yeah, that's 39% of the time you lost money.
Exactly. Okay, so 39. All right.
39. Now let's talk about long-term traders. So say they held it for 20 years long. They only lost money 0.1% of the time.
So wait, hold on. If I get this right, that means you actually have a better chance of making money in the stock market over a period of time than getting to Harvard.
Then get to Harvard,
right?
Facts.
That's a lot of people. That's what a lot of people like to say.
That's true.
But if you think about it, that's basically what it's saying.
Yeah, for real.
So
it's guaranteed, honestly.
Pretty much guaranteed. I don't want YouTube to start banning us. We can't say that, but so if you think about that, I would say that is a pro for long-term investing. So far, I'm leaning more towards long-term.
So far, sound like it.
And then let's just talk about this some more. You have this graph from U.S. News, which is showing you 3 different scenarios, right? So you have one person, which is the blue line, showing that they started investing at 25 and they invested $200. Then you have the green line saying they started investing at 35, so just 10 years later, still investing $200. And then the red line, they started investing at 45 and they also invested $200.
Okay.
So when you think about that, you're like, yo, everyone invests $200. The only difference is 10 years. But then you look at the outcome and you think about this. The person who started at 25 made over $500,000. Okay. Then you had the person in the green, they made over $250,000. Then you had the person in the red who made over $100,000. So you're like, yo, they all made money, right? No one lost money. But just think about this. The person who started 10 years before 35 and 20 years before 45 made nearly double and triple the amounts, which is kind of crazy because what does that tell you?
That tells you that the earlier that you start, the better. The best time to start is now, literally.
That's what it seems like to me too. So think about this. Long-term seems to be winning still. There's another graph that we want to show, though, that speaks to starting, but then stopping. So let's just dive into that.
Yeah, so if you see the blue line, that represents a person who invested $200 starting at age 25. And then they've been doing $200 a month, right? From age 25 to 35.
But then they stopped, right?
But then they stopped at 35 and just left the money in there.
Okay.
All right. Then you got a person who started at 35, investing $200 a month, and they invested for 30 years long.
Yeah.
$200 a month for 30 years long.
They didn't stop once. So the comparison is one stopped after 10 years and the other did not stop?
Did not stop. Just kept going for a 30-year time period. But they started later than the initial person, than the first person.
So who won that though?
The first person.
Exactly.
The person that started earlier won.
So it's the same concept, right? When you think about it, it's all about just continuing to invest, which is what we preach. Dollar cost average, long-term investing. So at this point, let's talk about you guys and how you guys can start. So we inputted some numbers into this calculator, right? And it basically said if you start with $0 right now and you just put in $500 a month for the next 20 years, which sometimes might seem like a lot, but remember, it's on average. And let's just say the stock market goes at 10%, which is how many years now?
That's the average for the past 100 years.
Exactly. So if you look at this, you would have invested $120,000, right? And then you end up tripling your amount after 20 years. So you make over $360,000, which is crazy to me. And all you have to do is just allocate and automate. So if you still don't know about investing, which you should because you follow the Bad Talk show, and you're like, yo, I just want to put my money in savings, what happens?
Man, if you put your money in savings, that is a choice to lose money. So, and what do I mean? Check out this calculation that we did for you. So, in 2002, if you would have placed $120,000 in the bank, just like we talked about in the investing example. By this year, 2022.
So literally just 20 years later, same duration.
Exactly. 20 years later, your $120,000 turned into $75,000.
Oh my God.
It is worth $75,000 20 years later.
So just think about it. In one scenario, you're losing money. In the other scenario, you're tripling your money, which is crazy because everyone tells you to save money, but then they don't tell you that you're losing money. Exactly. But everyone tells you not to invest your money because you might lose money, but you're making money?
Exactly.
So it's kind of twisted, right? That's why you have to, learn and do research on this stuff.
Yeah.
Go ahead.
No, I was going to say, because it's a choice. At the end of the day, you have two choices. Either you invest or you don't invest.
Exactly.
When you don't invest, you're making a choice, as we showed you, to lose money.
And speaking of you making a choice, let's just keep on doing some more research, right? So we looked at an article that came out a couple of years ago that spoke about a janitor who was able to allocate his money on a monthly basis, follow the long-term approach, and he came out with $8 million
Oh my God.
in his fund. Like, that is crazy to me. So if you think about it right now, right, I'm not throwing no shade to no one. Everyone's career is important. But when you look at it, a janitor's average salary, looked it up, was about $37,000, right? So it's between 27 and 37. So if you think about it, that's actually less than what an average American makes. Mm-hmm. So if someone who makes less than the average American was able to come out and make $8 million just because they follow long-term investing, what does that mean for you? Like, why can you not do that? Mm-hmm. You know?
He didn't make no excuses.
Exactly. And what did he invest in?
The same stuff we talk about on this show. Value stocks,
right?
You know, great ETFs, great companies.
Exactly.
He's not doing options and all these types of short-term strategies because we looked it up.
Right, exactly.
He was following a long-term approach.
Yeah. If you actually want to read this article, you can go check it out for sure. It literally speaks to what he invested in, the type of investments he did. And we actually showed you how to pick a stock before already. So you know what you have to look it up, you know, or where you have to look up to invest and what makes sense. So at the end of the day, it's really on you to invest in good companies and figure out which approach is better. And once again, I would say, so far, long-term is winning.
Yeah, low-key, long-term got it right now so far.
Right? And finally, let's talk about something that we all have to do, which is pay taxes.
Oh, man.
Right?
Taxes. Everybody hates that word.
Yeah, it's right about taxes is almost here. To all my CPAs, I'm sorry. But when you think about it, right, when you actually invest in something and you pull your money out and you make money on it, you actually have to pay something called capital gains tax. So let's just make a very simple example out of it. You invest $1,000, you know, and you make $500. So now you have a total of $1,500. You pay taxes on that $500, but the rate you pay depends on how long you actually, you know, kept the investment for. Correct?
Exactly. Yep.
So my short-term people out there, you actually pay heavy taxes because you're holding it for less than 1 year. Now, you pay exactly what you actually pay for regular taxes because it's the same, you know, rate. So if you look on the graph, if you make between $41,000 to $89,000, your short-term capital gains is 22%. If you make between $89,000 to $170,000, 24%, and so on and so on and so on. Yeah. But this differs from long-term, right?
Yeah. So long-term are for the people who held the stock for over a year.
Exactly.
So short-term is a year or less. Mm-hmm. Long-term is over a year, as we established. So for those people, if you make $41,000 per year at your job or less, mm-hmm. you don't even have to pay capital gains tax.
Which speaks exactly what the janitor did earlier. Because think about it, that example, he made $8 million because he did it for long-term. Mm-hmm. So if he was making less than 41, which the average salary is, he took advantage of that loophole, which is not even a loophole. It's actually legal.
It's legal. It's a legal finesse, man. And then for people who make between $41,000 a year to about $460,000 a year, just about almost.
Which is basically what everyone does and on average.
Yeah, that's most people we know. We're all paying the 15% rate.
Exactly.
Right? That we all fall into that tax bracket. They're paying 50% on their gains.
So you're saying 15 for long term, but then if you compare that to short term, you might be paying 22, 24, 32, like
or 35 as well.
Which is crazy, right? Because imagine he's holding long term, I'm holding short term. We're holding the same companies. I just decided to pull out in less than a year time span, where Rel kept it for more than a year. Same companies, everything's the same, just the duration. Why am I paying more? You know,
short-term capital gains tax.
Just think about that, for example. Yeah. So at the end of the day right now, I think it's clear, but drum roll here, we think long-term investing is actually better than short-term investing.
Yeah, it's ultimately the better thing to do. And that doesn't mean you can't ever do short-term investing strategies. Sometimes, like, we'll do like options tradings, for example, but we'll use options to fund our long-term investments.
Exactly.
Ultimately. You know?
Because at the end of the day, there are people who are very successful at option tradings. We're going to cover how to do all that for you guys, right? But just keep this in mind. If stats have proven that long-term is more successful, all the rich people actually do a long-term approach and they follow a long-term approach. Why would we switch up, right? Exactly. We're not millionaires and trillionaires like these other people. So if these people have millions of dollars that have been invested from them and they follow a single approach, we're going to follow the same approach.
Yeah, I'd rather listen to Warren Buffett, one of the wealthiest people ever, than some dude on my Instagram profiles, on my Instagram feed talking about, yo, I made $500 yesterday.
And I got this golden chain. Like Jared Allen, like everyone talks about instant gratification. Yeah. People were making fun of Jared Allen for not having like the drip. It's not about what you can show, right? Like no one cares about that. Don't focus on that. Focus on what you actually know, which is proven long-term wins, right?
Exactly.
So that is what we want to talk about today, to basically summarize and get that, information to you.
Yeah, and then next week we're actually going to wrap up stocks, and we're going to reveal to you that you can afford every single stock on the stock market.
Yup.
Because some people hit us up like, yo, I can't afford certain stocks that I want, like Google, Amazon. Those look expensive. You could afford anything in the stock market, and we're going to tell you how next week.
Which is crazy because I'm excited for that one for sure.
I'm hyped for that one.
And we also have an episode coming out on Wednesday, so make sure you stay tuned for that. But before we wrap this up, I think hold up for a sec. What is it again?
Oh, I think yo, can you guys actually comment, and subscribe, please?
Thank you so much, and hit that notification bell. But if you're still watching right now, thank you. We appreciate you a lot, and just make sure you stay tuned for Wednesday. But until then, we'll catch you later. Peace.